Hello, everyone. Good afternoon or good morning, depending on where you might be across the country. Thank you for joining us here today. We're going to go ahead and get started with our webinar provided to you today from the ABLE National Resource Center through a grant funded by Prudential. Our webinar today is ABLE, the IRS, and Taxes, What You Need to Know. As we're getting started, I'd like to tell you, in case you're new to us or could use the refresher, a little bit about the ABLE National Resource Center before we get started. So if we go to the next slide, the ABLE National Resource Center, or ABLE NRC, is the leading comprehensive source of objective, independent information about federal and state-related ABLE programs and activities, including guidance on tax-advantaged ABLE savings accounts. Our mission is to educate, promote, and support the positive impact ABLE can make on the lives of millions of Americans with disabilities and their families. Our pioneering work in this area and subject matter expertise makes us the foremost authority on topics related to the Achieving a Better Life Experience, or ABLE Act, ABLE accounts, state ABLE programs, ABLE-related policy developments, and comprehensive integration of ABLE and financial capability strategies for people with disabilities into public service delivery systems. Our website is www.ablenrc.org. We were founded and managed by National Disability Institute, or NDI, which is the only national nonprofit focused entirely on increasing the financial capability of people with disabilities. And ABLE NRC was founded in 2015. It's really the go-to source for all information on ABLE for people with disabilities and their families, as well as employers, state and federal agencies, service providers, tax practitioners, financial planners, and attorneys. We do want to note that our website, ablenrc.org, is privately owned and not affiliated with the U.S. federal government. We do provide a wealth of targeted resources. We're a national resource center. We provide best practices, guidance, tools, stories of ABLE account owners and family members to support your use of ABLE accounts. But please do know our staff does not provide case management or advice about investing in specific ABLE programs or anything along those lines. So just wanted to make sure everyone else on the same page with that. And now I'm going to hand it over to my colleague, Hope Price, who is our project coordinator, to run us through some logistics, and then we'll get started with our webinar. Hope.
Thank you, Miranda. Excuse me. For listening to the webinar, the audio for today's meeting can be accessed using computer audio or by calling in by phone. If you select computer audio, please make sure your speakers are turned on or your headphones are plugged in. If you do not have sound capabilities on your computer, please refer on your computer or prefer to listen by phone, please dial 1-929-205-6099, meeting code 833-9589-4223. For captioning, real-time captioning is provided during this webinar. The captions can be found by clicking on the closed captions icon in your Zoom controls at the bottom of the screen. Captions are also available in the stream text link at streamtext.net/player?event=NDI-IRS. If you do not see the captions after clicking the button, please alert the host via the chat box. For questions and technical issues, please use the Q&A box, not the chat box, to submit any questions. We will try to answer all questions during the webinar. If your question is not answered, or if you are listening by phone and not logged in, please visit www.ablenrc.org. For technical issues, if you have technical difficulties, please use the chat box to send a message to the NDI host or email hprice@ndi-inc.org. If you miss portions of this webinar, it is being recorded and the materials will be placed on the ABLE National Resource Center website, along with all of our other ABLE webinars at ablenrc.org/resources/webinars. Back to you, Miranda.
Thank you, Hope. And it's really great to be here with all of you today. Thank you for joining us. I do want to just make a few notes and introduce my co-presenters here. But one thing we do want you to know as we're getting started, you know, you may want to take notes, but our presentation itself has a lot of good content in it. And we're hoping you can kind of sit back and absorb it and know that a lot of the information is going to be on the slides. Even questions you might have might show up in later slides. So we hope you will download today's PowerPoint. As you're exiting, it also will be archived as well, but the information will be on the PowerPoint presentation. Our slides have a lot of great information on them. In addition to Hope, we also have Marlene Uliski, who's a subject matter expert on ABLE with our ABLE National Resource Center. She's going to be responding to your questions in real time in the Q&A, depending on how fast they come in. So you can definitely submit those questions in the Q&A. We also hope to have some time at the end for Q&A as well. Now, let me go ahead and introduce, in addition to myself, Miranda, with the ABLE National Resource Center, I'm the director here. We also have my colleague, Laurie Schaller, who is a manager of financial empowerment at National Disability Institute. She serves as a subject matter expert on ABLE programs and ABLE accounts. Laurie also manages and coordinates activities and builds relationships with federal, state, and local community leaders with an emphasis on expanding the mission of NDI. And she manages our assistive technology loan program in New Jersey and New York. She's a subject matter expert on the public workforce system, Social Security disability benefits and planning, and financial education and coaching. She served as a credit and housing counselor and directed a micro lending program. She's done a lot of great things. She's got she was a disability resource coordinator for the state of New York as well, and served as a community work incentive counselor and has a bachelor's in community and human services from Empire State College. So we're in great hands with Laurie. We're also in great hands with Dill, who is a friend of the ABLE National Resource Center, as well as being a senior tax analyst in the Wage and Investment Division of the Internal Revenue Service, based in the WNI headquarters in Atlanta, Georgia. Don has worked for the IRS for almost 35 years in various positions. Currently, his position within the Stakeholder Partnerships, Education, and Communication, that's the SPEC operating unit, has him partnering with key national organizations, including community, faith-based, social, public organizations, striving to inform and educate shared customers concerning their tax responsibilities. In this position, Don works with partners who strive to provide their clients with the information they need to know about potential tax benefits and credits, access to free tax preparation to avoid high-cost tax preparation pitfalls, and the ability to strategically use their tax refunds as a stepping stone to financial independence. Don also currently works as a National Relationship Manager for the National Disability Institute, Prosperity Now, the Center on Budget and Policy Priorities, and AARP's Foundation Tax Aid. So we're in great hands with Don and Laurie. With that, let me go to the next slide and just tell you a little bit about our objectives for today. The Stephen Beck Jr. Achieving a Better Life Experience Act, or ABLE Act, was passed by Congress in 2014. ABLE accounts are tax advantage Section 529A accounts under the IRS tax code, and the IRS has provided guidance related to ABLE accounts. And today's webinar will help you maximize your ABLE savings, qualify for tax credits, which may result in tax savings, and access free tax preparation services. So the webinar is going to give an introduction to IRS ABLE final regulations, which were issued on November 19th, 2020, which was just a few months ago, as well as do a review of tax incentives and strategies to increase ABLE savings. And at the end, we'll be providing information about free tax filing options and sharing some insight and perspective on that this year, because it is a bit of a different year this year and last year. So with that, I'm going to hand it over to Dawn to talk about the IRS ABLE final regulations. Dawn? And we'll need you to unmute yourself. There you go.
Thank you for that reminder.
Okay.
It's in full pitch already. So first and foremost, I want to thank each and every one of you for joining today. I know everybody is so busy in this time of year, so we really appreciate your time to be with us this afternoon. I want to also thank my wonderful partners at the National Disability Institute and the ABLE National Resource Center. They are tremendous partners, are wonderful advocates in this program. And to say they are subject matter experts on ABLE account is just woefully inadequate to explain what type of expertise and experience they bring to this topic. So I am honored and privileged to be with them today. And so I just wanted to quickly go, and I'll hope to let you go to the next slide. When we do want to talk to you today about the ABLE final regulations. And it has been a long time, as Miranda noted, the ABLE account started, and hope you can jump to the next slide, that the ABLE account started back in 2014, and the IRS has been working diligently over that time to work on regulations, which is always a critical piece of the operation when you talk about tax laws. After they're passed by Congress, they're often in a rough format, if you will, and then the IRS does regulations to pinpoint exactly how the tax law will be operated. And so I'll let you go to the next slide too, Hope. And so, as we noted, we are thrilled to say that after many years of ability for partners and end users to provide comments, that the IRS did issue final regulations back in the fall of last year. And these final regulations now provide some specific guidance that can help all users as they prepare to fully integrate the utilization of ABLE accounts. And among the final regulations, there are some important parts that we're going to hear a lot more about today from these subject matter experts. First is they do provide a priority listing of who may open an ABLE account, what documentation is required, and what records must be kept on file by all ABLE account owners. Additionally, they allow ABLE plans the option of using sub-accounts with different signatory or co-signatories, which can be used for better management and control of different types of expenditures and distributions. And finally, they also allow all ABLE plans up to 2 years to make changes in order to become compliant with these final regulations. So for those of you on the call today, hearing some of these things, maybe it's the first time you're hearing, please, no worries. There is a time to make the changes with and come in full compliance with these final regulations. So again, thank you for having me. I'll be looking forward to adding comments throughout the presentation, and I will switch it back over to Laurie now.
Great, thank you very much, Don. So what is an ABLE account and who is eligible? An ABLE account is a Section 529A tax advantage savings and investment account owned by a person who has a Social Security number or tax filing ID and has a disability or blindness with an onset of disability before age 26, and they either receive Supplemental Security Income, that's SSI, and or Social Security Disability Insurance, SSDI, benefits, or the person can self-certify that they have a written and signed disability certification from a qualifying physician. So the new regulations permit a self-certification of eligibility that the ABLE account owner or the person's agent under a power of attorney or a parent or legal guardian has a signed physician's diagnosis that is kept on file and will be provided to the ABLE program or to the IRS upon request. Newly clarified, the term eligible individual includes those individuals whose SSA entitlement to benefits was suspended due to excess income or resources. And also newly clarified, the standard of disability eligibility is applied without regard to either the individual's age or whether the individual is engaged in substantial gainful activity. So that means that the person is allowed to work, and if the person comes out of pay because their earnings are above substantial gainful activity and they continue to have a disability, they continue to be eligible for an ABLE account, even though they're not in pay status for SSI and or SSDI. Next slide. New disability certification may be signed by a doctor of medicine or osteopathy, a doctor of dental surgery or dental medicine, and, for some purposes, a doctor of podiatric medicine, a doctor of optometry, or a chiropractor, indicating the disability onset occurred prior to the age of 26. So just a note, this disability certification may not be signed by a licensed psychologist, clinical therapist, or certified vocational rehabilitation counselor. A person really needs to go to their primary doctor and request that disability certification. And we now have a sample posted on our website within our service provider toolkit. So to note, flexibility is offered states to adopt methods for recertification, including but not limited to certification by the designated beneficiary under penalty of perjury. So they're leaving this flexible, and should a person be discovered, of course, not to have a disability, then there are consequences. Okay, and Miranda, would you like to cover the next slide?
I would. So Don had spoken earlier about new priority of order for opening an ABLE account. And here's the list, starting from the top, going down, the order of priority for those who can open an account and in what order. So we see here at the top, an eligible individual with a disability can open an ABLE account. Next would be a person selected by the eligible ABLE account owner. And it's important to note, an eligible individual with legal capacity may delegate responsibility for another person to establish or to serve as the person with signature authority over the account. The next would be a person's agent under a power of attorney, conservator, or legal guardian. The next on the list would be a spouse, parent, sibling, or grandparent. And then finally, a representative payee, which could be an individual or an organization. So representative payees are subject to all applicable Social Security Administration rules. And a person can self-certify that they are authorized to open the ABLE account, and there is no other person with higher priority to establish the account, and an ABLE plan can accept that self-certification. And to explain a little bit more about that ABLE owner delegation of authority, if we go to the next slide, an eligible individual with legal capacity may delegate signature authority over the ABLE account to another person. So the eligible individual may also remove and replace from time to time the individual with signature authority and name a successor signatory. The regulations also allow a person with signature authority to name a successor signatory consistent with the priority of order rule that was on the previous slide if the ABLE account owner lacks the legal capacity to do so. And I'm going to hand it back to Laurie now to talk about those sub-accounts that Don had mentioned that I'm sure you're all interested in.
So a qualified ABLE program may provide an ABLE account with the option to use multiple sub-accounts as part of the one allowable ABLE account. The person with signature authority over the ABLE account may transfer all or a portion of the funds in the ABLE account to one or more of the sub-accounts and may choose one or more of the sub-accounts. Each sub-account may have a different person with signature authority over that sub-account. So next slide, what does that mean? What this means to an ABLE account owner is that sub-accounts allow controlled access to the funds in one or more sub-accounts, which can be set up for specific purposes or to allow time to teach money management skills and budgeting for that ABLE account owner. So just to remind our audience, ABLE accounts are always opened in the individual's name who has the disability. So these sub-accounts allow other people to help that individual manage the funds in those accounts. Next slide. So how much can be contributed to an ABLE account each year? So $15,000 total from all sources within a calendar year can be deposited in an ABLE account. ABLE account owners who work and do not have contributions made to a retirement plan for the tax year may make additional contributions from their earnings or other income that equals up to the amount of their earnings, subject to this limitation. The amount is limited to whichever is less. So ABLE account owners' earnings for that tax year, or if the person lives in the continental USA, up to an additional $12,760 from their earned income. If the person lives in Alaska, up to $15,950. If the person lives in Hawaii, up to $14,680. And next slide. So what does this mean? It means if you work and do not have an employer-sponsored retirement plan that you're participating in this year, and you make less than $12,760, you can put all of your wages into your ABLE account. This is in addition to the $15,000 annual contribution limit from all combined sources. And just a reminder, it's a different amount for those individuals who live in Alaska and or Hawaii based upon the federal poverty rate for the prior year. Okay, and next slide. So, ABLE contributions may be made by any person, including a corporation or employer. They may be made in the form of cash, a check, money order, credit card payment, and or after-tax payroll deductions. Contributions made by an employer to the account of its employee or of a family member of the employee are subject to the rules governing taxation of compensation. Contributions to an ABLE account may be made by any person, and that includes trusts and tax-exempt organizations as well. So next slide, what this means to that ABLE account owner is special needs trusts and pool trusts are taxed at a high rate. It may be to a person's advantage to discuss transfers from these accounts directly into an ABLE account for qualified disability expenses, simply to reduce the cost of holding funds in a protected account. Okay, and next slide, I'll hand it off to Miranda. Thank you, Miranda.
Great, thank you, Laurie. So the next few slides, I'm going to go over rollovers into ABLE accounts from 529 college savings accounts, and then I'm going to talk about ABLE program to ABLE program rollovers. So between December 22nd, 2017 and before January 1st, 2026, a 529 qualified tuition plan, those college savings plans, owned by the beneficiary of the 529 plan or a member of that beneficiary's family may be rolled over to an ABLE account with no federal tax impact. The rollover must occur within 60 days of the distribution, though. So these rollovers are subject to the annual contribution limit of $15,000 for ABLE accounts. That's important to keep in mind. If we go to the next slide, you can see, oh, I do want to add, a 529 college rollover allows for those funds to be used for qualified disability expenses and do not impact eligibility for benefits when saved within an ABLE account in the person's name. And a 529 college savings plan rollover can expand the allowable expenses for ABLE account owners. So that's why you would do that. If we go to the next slide, you can see, what does this mean for you? So if you have both an ABLE plan, an ABLE and a 529 account, so an ABLE 529A or a 529 college savings account, you may wish to consider a rollover. The expenses permitted under a 529 ABLE account are more broad than those that are allowable under a 529 qualified tuition program. So if we go, and again, you know, those qualified disability expenses within a 529A ABLE account do not impact eligibility for benefits when saved in the ABLE account in the person's name, okay? If we go to the next slide, we're going to talk about ABLE to ABLE rollover or transfers. So you can only have one ABLE account at a time. If an ABLE account owner chooses to move the account to another state ABLE program, they can move the entire amount through a rollover, and they could do that once every 12 months, or once ever, or never. But if the program permits, the funds can move from one ABLE account to another through a direct program-to-program transfer, which does exist. So during the ABLE account owner's lifetime, all or a portion of the ABLE account may be rolled over to another eligible individual, such as a sibling, step-sibling, or half-sibling of the ABLE account owner. And again, that person you're rolling over your ABLE account into would also have to be eligible. And what does that mean? If we go to the next slide, it's important to know that amounts distributed from the ABLE account and rolled over within 60 days to another ABLE account are not included in gross income. And of course, if there's that automatic transfer opportunity that exists, that'll help with that 60-day piece as well. This next section is going to be on qualified disability expenses. And I'm going to hand it over to Laurie to talk about what qualified disability expenses are, as well as non-qualified ABLE distributions and what impact might be around that, because we know people have questions about that as well. So Laurie, can you tell us about qualified disability expenses?
Great, thanks, Miranda. A qualified disability expense is any expense related to the account owner as a result of living a life with a disability that helps that person to maintain or improve their health, independence, or quality of life. Categories are intentionally broad and include examples such as education, housing, food, transportation, healthcare, and more. As long as withdrawals are spent on qualified disability expenses, ABLE account growth is tax-free. And next slide. So what this means is some qualified disability expenses may also qualify as taxable deductions for the ABLE account owner. So this could help to lower, for example, your taxable income. So we're talking about like out-of-pocket medical expenses. If a person needed to purchase business equipment, for example, that may be a possible deduction for that ABLE account owner. And there's additional information here posted at the 2020 IRS publication 907 and publication 502. Okay, and next slide. So non-qualified ABLE distributions. So this means if a distribution is spent for a non-qualified purpose, the investment earnings portion of the distribution is subject to regular income taxes for that year. The tax on the investment earnings portion included as taxable income is increased by a 10% penalty if that person uses their ABLE savings, for example, to purchase something that is not a qualified disability expense. So a distribution for a non-qualified purpose or for housing is counted as a resource for that ABLE account owner if they withdraw the money from that ABLE account and they hold on to that money, maybe on their debit card or just on their person beyond the month that they took that out. Let's say they take it out in January and they still have that money today and they intended to spend that money on housing expenses. Well, that is now accountable resource for that individual. So people have to be careful to spend their ABLE monies on a qualified disability expense, and when it comes to a housing expense, to take that money out maybe in the beginning of the month and make sure that they pay that housing expense within that very same month. For example, a $10,000 non-qualified expense that had accrued $1,000 in interest while it was growing within that ABLE account may count as $1,000 in taxable income with a tax penalty of $100 if that person spends those monies on a non-qualified disability expense. So what this means to you, next slide, means tested benefits may be at risk. So you simply want to follow that rule. And I think that's why these sub-accounts are set up too, so that another individual could help a person, for example, to pay that housing expense within that same month for the person who needs maybe some extra guidance. And next slide. So Miranda, if you could speak to medical improvement for an ABLE account owner.
I can. Thank you, Laurie. And I know people were probably really clued in on what you were saying just now about those non-qualified ABLE distributions, because we get lots of questions about that. And that piece about the means tested benefits may be at risk is really important. But the other thing to know too, people ask all the time, you know, if I spend something on a non-qualified disability expense, am I going to lose my account funds? And you could see from that example that Laurie provided, it's really the taxable income would have a tax penalty for those expenditures, which I think is, I hope that's a helpful clarification for folks. Thank you for walking us through that, Laurie. And next up here on this slide, we can see, you know, if you've got questions about medical improvement, well, here's some answers about that. So when medical improvement occurs and there's a loss of eligibility, the ABLE account remains an ABLE account. ABLE contributions may continue throughout that calendar year. Distributions made on any date after the loss of eligibility are those medical improvements that cause the loss of eligibility. Those are not qualified disability expenses. So we saw the example Laurie just gave us, right? The investment earnings portion of ABLE distributions are then included in the gross income of the ABLE account owner and may affect eligibility for means tested benefits. If we go to the next slide, we can see what does this mean for you. If you're no longer disabled, you can allow your funds to remain and grow in your ABLE account tax-free until you decide to withdraw the funds. So keep that in mind. Now I'm going to hand it back to Laurie to talk about keeping in line with the medical improvement. We'll move over now to talking about Medicaid Payback and some new information from IRS and guidance around that on the next slide. Laurie?
Thanks, Miranda. So a successor designated beneficiary may be named during the lifetime of the ABLE account owner, and that takes effect upon the death of the ABLE account owner. The ABLE account is subject to federal estate tax as well as payment of outstanding qualified disability expenses and any state claim. An ABLE plan may satisfy a state's Medicaid reimbursement claim only after the payment of any outstanding qualified disability expenses, funeral and burial expenses are paid whether or not the subject of a pre-death contract for those services was made or not. Assets are then payable to the estate of that ABLE account owner if no beneficiary is named. So I just want to clarify, should an ABLE account owner pass away, any qualified disability expenses that are outstanding for that individual are paid from the ABLE account, and that can include funeral and burial expenses. And in many states, there are rules in place that Medicaid can request payback for any Medicaid expenses that that ABLE account owner had used since the time that they had opened an ABLE account. And next slide. A state is not required to file a Medicaid reimbursement claim, and there is no state ABLE plan obligation to determine whether claims could be filed by multiple states. So that's, for an ABLE account owner who, for example, has lived in several states since the time they had opened an ABLE account. Many ABLE plans have taken steps to reduce or eliminate Medicaid payback for their state residents. ABLE plans have provided notice of their payback policy within the plan comparison tools and disclosure documents posted at the ABLE National Resource Center. So if you, for example, select a state ABLE plan, you can see what guidance they have provided regarding their Medicaid payback policy. And next slide. So what this means to you is if you have not received Medicaid since opening an ABLE account, there is no state Medicaid reimbursement. You can save for the purchase or down payment of qualified disability expenses for large items or expensive services and withdraw funds or draw down funds as you need to. Okay, and then Miranda, if you'd like to begin the session on tax incentives that help build ABLE savings.
Yes, thank you, Laurie. This next section is going to be about exactly that, tax incentives that help build ABLE savings. So we're here for that. With the 2021 tax filing season beginning February 12th, due to the pandemic and to expedite stimulus payments, keep that in mind. So if we go to the next slide, I'm going to start off by talking about people with disabilities and taxes. So the IRS has information for people with disabilities qualifying for certain federal tax deductions, income exclusions, and tax credits. So the 2020 publication 509 tax calendar, which you would use for your taxes for 2020 as you're filing them now, is available at www.irs.gov/publications/P509. And tax credits may be state or federal. What they do is they reduce the income tax owed dollar for dollar, and some may result in a refund. All or a portion of the refund may be saved in the ABLE account. Could be used to open an account for the first time, could be used to contribute to an existing account. So tax credits are meant to bring relief to some taxpayers who earn low to moderate income and take care of children, invest in education, or save for retirement or other goals. And we're going to get into ABLE state tax credits and deductions in the next slide. And Laurie, I'll hand it back to you to cover that.
Great. So the ABLE National Resource Center has helpful tools to compare state ABLE plan features, including identifying states with tax deductions that are available for the state's residents, with one plan being an exception. Many individuals search their home state first to see if a tax deduction is available in their state of residence or another state by going to the state comparison tool posted here. For example, Wisconsin does not offer an ABLE program, but Wisconsin residents may apply for a state tax credit or deduction for any amount deposited into another ABLE plan from another state. And so you can use our comparison tool to see this information at https://www.ablenrc.org/state-plan-search and /. And when you get to our website, you can see by going through each of the categories all the information that we provide on multiple topics to help you select a plan and then to make best use of your ABLE account. So next slide. What does this mean for you? So a state tax credit or deduction may lower the amount of tax due, or it may allow a state income tax refund, allowing for increased savings. And so with a refund, you know, a person who has an ABLE account, they can, when they're filing their taxes, ask that that refund be deposited directly into their ABLE account, either all or a portion of their refund, for example. Okay, and then next slide is about the Savers Credit. So this is available to ABLE account owners who work and deposit a portion of their earnings into an ABLE account. The maximum amount of the credit is 50%, 20%, or 10% of total ABLE or IRA or retirement plan contributions. The non-refundable credit is up to $2,000 for an individual, or if it's a couple who each own an ABLE account or other qualified savings account and file jointly on their income tax filing. So distributions from the ABLE plan are also taken into consideration. So for example, a person who made deposits to their ABLE account, if they spent portion of that money, that may in fact end up reducing the amount of the refundable credit. And the tax software calculates all of that, so you really don't have to worry about that. Next slide. So what this means to you is this non-refundable tax credit cannot be more than the tax you will pay for the tax year. By claiming the Savers Credit, you can reduce your overall tax liability. A saved and invested income tax refund can grow significantly over time. So when you are able to save money on your taxes and you save that money, that can grow significantly over time. And people are amazed how much money they have just by setting aside their income tax refund over a period of time. Miranda, would you like to cover the Earned Income Tax Credit?
I would, because well, what you were just talking about was, you know, Savers Credit potentially reducing or eliminating your tax bill. Let me tell you about the Earned Income Tax Credit, which is the next slide. We've got 3 slides on this. The Earned Income Tax Credit, or EITC, is a benefit for working people who have adjusted gross income within certain limits. So even if a person does not owe any tax or they are not required to file, an EITC may provide a tax refund. And a common myth across many years was, you know, if you didn't owe any taxes, if you weren't required to file, people with disabilities often didn't. But if you were to file and were eligible for an EITC, you know, we've seen that tax refund potentially significantly increasing people's quality of life. So you can use the EITC assistant to find out your filing status, your child status as a qualifying child, your eligibility for the credit, and estimate the amount of the credit you may get. So EITC has special rules that apply for members of the military, members of the clergy, and this is key, taxpayers with certain types of disability income or children with disabilities. So important to pay attention to this one. If we go to the next slide, I'll drill down to some numbers for 2021. With the EITC maximum credit that you can receive. So this is the maximum amount of credit. All right, doesn't mean you're going to get this, but you could up to this, and it'd be worth getting, right? I mean, if this money were lying on the sidewalk, you'd bend over and pick it up, right, and put it in your ABLE account. So the maximum amount of credit for tax year 2020 is $6,660 with 3 or more qualifying children, or $5,920 with 2 qualifying children, or $3,584 with 1 qualifying child, or if there are no qualifying children, $538. So we have, IRS has a link here that where you can go to, we talked about that on the previous slide as well. It's a lengthy one. Download the PowerPoint. These resources will all be on the final slides of the presentation as well, but definitely worth doing. And actually, as we go to the next slide, you'll see, what does this mean for you? I've been saying it this whole time. It means something good, but also keep in mind some states, not just the federal level, but some states also have an earned income tax credit. So if an EITC results in a tax refund, like we've been saying, that can be saved in an ABLE account or used to open an ABLE account if an ABLE account hasn't already been opened. I'll go ahead and hand it over next to Laurie, because we have been talking about qualifying children here, but go ahead and talk about child independent care credit, Laurie.
Sure. Before we move forward, I wanted to make one more comment regarding the earned income tax credit. So this is something brand new this year due to COVID. So many people, worked all of 2019 and they filed their taxes for their earnings. And then in 2020, COVID came along. Many people worked maybe the first 3 months of 2020 and then they lost their jobs. And now they go to file their taxes. Well, if that person wants to apply for earned income tax credit and they meet the eligibility criteria, this year, while filing for their 2020 taxes, that person can say, gee, I had more earnings in 2019, and they can put that 2019 amount of earnings into the earned income tax credit column to increase the amount of their earned income tax credit for 2020 because of no fault of that individual's situation. They lost their job, and this is part of the temporary relief that is provided through the Taxpayer Certainty and Disaster Tax Relief Act of 2020. So that's a special opportunity for people to increase the amount of their refund. Yes?
Laurie, I'm just going to say, I told everyone at the top of the webinar we were in great hands with you. Thank you so much for adding that very important detail, because it could be very relevant for folks and really meaningful. Okay, thanks.
Okay. Child independent care credit. Okay, so if you paid someone to care for your child or another qualifying person so that you or your spouse filing jointly could work or look for work, you may be eligible for this tax credit as well. To claim the exclusion, a Form 2441 must be completed. And there are directions at the posted IRS website to give you further direction. So next slide, what this means to you. This is a non-refundable tax credit that gives back a portion of the money you spend on care and can reduce your tax bill by hundreds or even thousands of dollars. You can claim the credit regardless of your income, but the credit gets smaller as people's income goes up for that taxable year. So the next slide regarding stimulus payments. So we know that, for example, many people did not receive their stimulus payments for 2020. And there are more stimulus payments now being paid out for 2021. So any eligible taxpayer who received less than what they should have received in the economic impact stimulus payments will get the remaining credit applied to their 2020 tax bill. To learn who is eligible to claim this recovery rebate credit, there is a link posted here below, and that takes you to the IRS forms and their publication form regarding their 1040 form. Eligible individuals must file Form 1040 or Form 1040-SR to claim the recovery rebate credit, even if they are normally not required to file a tax return. So this is only for those individuals who did not get their economic stimulus payment for last year. Now, eligible individuals who did not receive their full amounts for both economic impact or stimulus payments last year, or eligible individuals whose income was higher in 2018 or 2019 and the IRS did not issue a first or second economic impact payment because their earnings was just too high. But again, maybe that person's income went down for 2020 and they really should have gotten that economic stimulus payment. This is a way, by filing taxes for 2020, the person can request that recovery rebate credit and obtain that payment if they are eligible. Okay, so let me go to the next slide here. So when budgets are stretched thin, a state or federal tax credit may provide savings which can be saved in an ABLE account. When tax refunds and stimulus payments are saved in a non-ABLE account, they count towards a resource limit by means-tested benefit programs after 12 months. So this is an important fact. Miranda, would you like to take it from here?
Sure, thanks, Laurie. Yeah, let's see, what does that mean for you? All right. So what this means for you, the information Laurie was just providing on tax refunds and public benefits, keeping in mind that ABLE accounts, that protected account, it's a great way to save for either short-term or long-term needs without an impact on most means-tested benefits. If you don't receive a means-tested benefit, it's still a great way to save because your money grows tax-free, and you can certainly be a person with a disability, a qualifying disability, who is not on means-tested benefits, but certainly has expenses related to your disability. And it can be used at any time, and may be an additional way to save for retirement or other longer-term items or services that you might be saving up for beyond that 12-month period that we had talked about before, being able to go beyond that so you don't feel like you have to spend down too fast. You can actually use it to save up and spend it on things you need that will increase your quality of life. So let's talk next about some other factors that may impact ABLE accounts and savings. If we go to the next slide, and here Laurie's going to start us off talking about employment and saving in an ABLE account and some of the details around that. So Laurie, I'll hand it back over to you.
Great, thanks, Miranda. So there is no change in the way benefit programs count income for an ABLE account owner who works, whether their money is saved in an ABLE account or not. ABLE accounts are not a way to disregard income that is earned. So if you are working or plan to become employed and receive a disability-based benefit from Social Security, use the Find Help tool at choosework.ssa.gov/findhelp to locate a Community Work Incentives Coordinator, a CWIC, who works for a Work Incentive Planning and Assistance Program, or WIPA. And by going there, you can ask for free benefits counseling if you have been working and you receive either SSI and or SSDI benefits. And that person will, in writing, inform you, given your work history to date since you began receiving your benefits, what work incentives you are eligible for. And work incentives can help to reduce countable income. That can help that person to save more money in their ABLE account and pay for expenses that are qualified disability expenses. So that CWIC or WIPA can help you to understand how working affects your benefits and to use the work supports that Social Security Administration or other programs like maybe SNAP or HUD offer that are specific to you and your financial goals. This can help you to become employed to work at higher levels to your fullest ability or to transition off benefits if that is your goal. So a work incentives counselor, a CWIC, who works for a work incentives planning and assistance project, or a WIPA, analyzes all public benefits and, again, provides free benefits counseling services to individuals who receive that SSI and or SSDI benefits. And so, like we said, you can find a person to help with benefits counseling at choosework.ssa.gov/find-help. Okay, and next slide. So what this means to you, a CWIC or WIPA can help you to use the Social Security Administration and other program work supports so that you keep more of your earnings to save and to achieve your financial goals. Okay, and then next slide. So, tax withholding. Like all individuals who work, ABLE account owners should verify that they are having the right amount of income tax withheld from their pay, their unemployment, maybe their Social Security disability insurance benefits, or from their retirement benefits. And the IRS urges all individuals to perform a withholding checkup each year by using their fully accessible withholding calculator. Doing so now will help avoid an unexpected year-end tax bill, possibly a penalty or a large refund, which could leave you short on money to pay bills throughout the year and less to save regularly. So let me explain this from my perspective. When I worked years ago, before I knew about this, I would get these huge income tax refunds, and then I used that money to pay all the bills I couldn't afford to pay, that previous year. And once I changed my withholdings and instead of getting a huge income tax refund, tried to get a smaller income tax refund, I had more money to be able to pay my bills every single month. And now I use that tool to maximize the amount of money that I can save for my retirement. And by saving my money that I earn in a retirement account, for me, it's reducing the amount of my taxable income. So that really helps me to save more, again, for my future. So Miranda, I'll pass this on to you next.
Thank you. And I think that's a pretty good best practice, which is going to be the next slide we have. And I had to be, it's a good thing I was on mute, Laurie, because I was laughing when you were saying that, and not because it was, but because it's exactly what happened to me too. You'd get this windfall, sometimes, not big windfall, but, enough that it should really be spread out across the year so that you don't feel like you're scraping by. So making those adjustments is a big deal. And that's here on our slide. We have 3 best practices for you to keep in mind in case that resonated with you. The story from Laurie, I know is true for me, but some other things, to keep in mind or along those lines, verify that your tax withholding is accurate or make changes with your employer or with Social Security. And you can use publication 505, Tax Withholding and Estimated Tax. So the things that does is, so checking withholding can help protect against having too little tax withheld and facing an unexpected tax bill or penalty at tax time, which is the opposite of what Laurie and I've experienced, or what Laurie and I both experienced. You know, you may prefer to have less tax withheld up front so that you receive more in your paychecks and get a smaller refund at tax time. So that might be preferable. I know it sounds like Laurie and I've made that switch ourselves. The other two best practices, you know, deposit all or a portion of a refund into ABLE. And to do that, you would use Form 8888, because 8s are great, right? But ask your tax preparer whether you can use the tax credits that we've discussed here. This is why, you know, take this with you as you're doing your tax preparation and go through this. So those are some best practices to keep in mind. We like to pop those up and make them clear for folks. I'm actually going to hand it back over now because Laurie can share with you some more information about ABLE investments and how they grow tax-free, why that's great, some more information about that. So Laurie, take it away.
Great. So every ABLE plan available across the United States offers a savings account portion. But in addition, they offer opportunities to invest money within that ABLE plan as well. Some ABLE savings accounts offer FDIC insurance for the checking or debit card account option, and some also allow for interest growth on the money saved within the savings account portion. Investment options allow for investment growth, but investments may also experience losses. ABLE account earned interest is not considered income by the Social Security Administration regarding disability benefits or any means tested benefit or for income taxation purposes. ABLE plans have fees disclosed in the plan disclosure document and compared here at our website through the state plan search. So we invite you to, again, go to our website and compare the different plan features to see what plan might work best for you. In terms of investment performance to date, each ABLE plan has posted at their website how their investment portfolio has performed to date. So you can sort of compare that information as well. Okay, and we wanted to introduce free tax preparation services so that everyone is aware that there is assistance available to help people to file their income taxes. Okay, Miranda?
Yeah, if we can go to the next slide, Hope. And actually even the one after that, for free tax preparation services. The next 3 slides, this one and the next 2 after it, are going to talk about free tax preparation and tax forms. I'm going to cover this slide, then Laurie, and then we're actually going to get some insight on the tax season this year and tax preparation services from Dill and his perspective with IRS. But before we get to that, and some good insight and guidance from Don, let's talk about the free tax preparation services. There is no income limit to file federal and state taxes using My Free Taxes. So that can be found at https www.myfreetaxes.com. It's a fairly easy website to remember, myfreetaxes.com. If you're unable to complete your tax return because of a disability, you may be able to obtain assistance from an IRS office or the VITA sites, that's Volunteer Income Tax Assistance, or tax counseling for the elderly programs. Tax assistance for individuals with disabilities and the hearing impaired. For information on that, you can go to www.irs.gov/tax topics/TC102. And Laurie, can you tell us a bit more about IRS free file tax preparation and our ABLE, then we'll get to ABLE tax forms that are specific to ABLE.
Sure, thank you. Okay, next slide. Okay, so IRS Free File allows eligible taxpayers with adjusted gross income below $72,000 to prepare and file their federal individual income tax return for free using brand name tax preparation and filing software. Some programs also provide state tax filing for free options as well. If the adjusted gross income is more than $72,000, there are free file fillable forms you complete yourself with limited guidance available. And so to go on to ABLE tax forms. So people who have an ABLE account are now receiving tax forms from their ABLE plan. And the first might be called a 1099 QA. And that's telling the person, for example, what is on record of what distributions were made from that ABLE account on qualified disability expenses. So an ABLE program issues this form to ABLE account owners and to the IRS to report all withdrawals made from the ABLE account, investment earnings, and ABLE to ABLE transfers or termination of an ABLE account.
And Laurie,
And this
if
form,
we could get,
yes.
Hope, if you could go to the next slide.
I'm sorry.
That would be great. There you go. So folks don't have to feel about
Okay.
they got to write it down. It's all here on slide 61. Okay, thanks, Laurie. Thanks, Hope.
Okay, great. And then form 5498 QA. So this provides information about what was deposited into that ABLE account for that calendar year. An ABLE program issues this form to the ABLE account owner annually to report contributions, including rollovers like from that 529 college account that was made into an ABLE account, fair market value of the account, opening of a new account, certification of a qualified account, and the disability code as well. If you have any questions about the amounts on these forms, you should contact your ABLE program administrator and keep the forms with your important records for your ABLE plan. You don't have to file taxes simply because you, for example, own an ABLE account. But if, let's say, a person had worked that calendar year and they're now going to meet or prepare their taxes, this information may be important for how much the person deposited into their ABLE account from their earnings and how much they spent from that ABLE account that same calendar year to calculate the saver's credit for that ABLE account owner. Okay, and the next slide, Miranda, I'll pass it on to you.
Well, and actually we want to get, thank you, Laurie. We want to get Don to weigh in on, the tax preparation this year, and he's got some perspective certainly from his position on it's been a different time this year and last year, Don, than previous. So can you, we just shared some resources and tips, but can you give some additional insight to our audience today around what they can expect and how they might best prepare for this season?
Absolutely, and thank you for that opportunity. And first and foremost, Laurie and Miranda, the information you shared today was just extraordinary. So well done, congratulations, thanks for all this information. But as we mentioned, this is going to be an extraordinarily challenging year for those who need assistance, particularly the free assistance that we are so proud to offer through the IRS through our VITA and TCE programs. The reality is that many of our sites can't open due to the COVID pandemic. Many of our volunteers, who tend to be older volunteers, retired, are just not able to assist us this year. So with that, I just want to make sure your expectations are, in line with the reality of that many sites that you might have seen in your communities in prior years are not going to be available. But as the slide said, there are other options, including the My Free Taxes, the IRS free file, which range from strictly DIY for those who are comfortable doing their own taxes, just need the ability to have a free software and a free ability to e-file both the federal and the state tax return. And to others where they will provide you some assistance while you do it on your computer. For example, they may call you and walk you step by step. So as we talked about, it's an incredibly important year to think about your tax filing requirements. As we noted earlier in the presentation, for those who did not receive the full economic impact payments, one back in the spring of last year, economic impact payment 2 in January of this year. If you didn't receive any or you didn't receive the full amount, the only way you can get those amounts is to file a tax return. So please take an opportunity to look into these different options and find the one that fits your needs, and hopefully that will get you where you need to file as soon as possible. So I'll turn it back over to you.
Thank you, Don. I think that's really helpful insight, and I'm sure people can appreciate. I mean, we're all people doing the best we can over here. How can we be best prepared? Which actually we're going to talk about next steps here in a minute, about ABLE accounts and tax time savings fact sheet Laurie's going to go through with us, and some resources here as we round out our time together. Don, we very much appreciate your participating and your partnership in all of this. Working together has been wonderful. And I do want to say, in addition to Laurie and myself, I think Marlene in the Q&As has answered 96 questions that have come in over the course of today's webinar. So kudos to Marlene, and and hopefully it's been a dynamic, engaging experience. We're really hoping folks are getting their questions answered and some insight and strategies, which leads us right into our next section here as we're wrapping up in our final few moments, next steps and resources. So Laurie, can you tell us about ABLE accounts, tax time savings fact sheets, and other resources we have?
So tax time is another point in time to introduce ABLE accounts to tax filers, tax preparers, and people with disabilities. So many of the free tax preparation sites I know have downloaded our flyer from the ABLE National Resource Center, and they are informing people who receive SSI and or SSDI or who have a disability that they may be ABLE eligible. And in some cases, ABLE accounts are even being opened either with the service provider or through free tax preparation service providers. The fact sheet at our website lists information regarding the possibility of qualifying for state income tax deduction, saver's credit, and the option to have tax refunds directly deposited into an ABLE account. So to find that fact sheet, it is posted at our website, and it is www.able.nrc.org/able-accounts-tax-time-savings. And we have another publication on ABLE and tax benefits, and that is available in the same area at our website. So we wanted to share with you the next slide, ABLE National Resource Center.
Yeah, can I quickly go through these, Laurie? Sure. I just want to maximize our final few moments here and make one quick note. Apparently, Marlene let me know there's so many questions about sub-accounts, and the states have 2 years to get those sub-accounts into place. So all those folks who are asking about sub-accounts, the states have 2 years to put that in place based on the IRS final regs. So definitely wanted to get that note out there for folks. Many of you had questions about that. The next 2 slides, I'm not going to go through those. We have this first slide is ABLE NRC resources. It's got some great links for you. We have the final regs from IRS, some key takeaways. It's only 4 pages instead of reading the whole reg document from us at the center. We also have information on ABLE accounts and tax time savings, ABLE accounts and opportunity to build financial resilience, a link to a 2021 PDF with information on that, as well as a disability certification sample letter that can be used. And on the next slide are links to IRS resources on earned income tax credit, saver's credit, credit for the elderly or disabled, child and dependent care expenses, that recovery rebate credit, 2020 tax highlights for people with disabilities, as well as information on medical and dental expenses. So there's links to all of that on these last 2 slides here. And then finally, as we're wrapping up our time, and we're so grateful you all were able to join us today, we want to let you know about our next webinar that we have coming up in March, on March 18th from noon to 1:30 p.m. Eastern Time. We'll be having a spotlight on the Florida ABLE program. So there's the link to register for that. That will also be going out on our listserv. And finally, because it is the time that we're living in, this is a very prevalent resource. I want to go to the next slide to highlight what's available to us from our partner center, our sister center at National Disability Institute that we opened last April with funding from Wells Fargo. We opened a COVID-19 online resource center for people with disabilities and chronic health conditions. So you can check out the Financial Resilience Center for information related and specific to COVID. You'll see some cross work between us and ABLE NRC and the Financial Resilience Center. We work closely together in this area. And with that, we're coming right up against our 75 minutes. We used all of it, and we're glad you were here to join us. And we hope you'll take a moment to fill out our post-training survey and give us some feedback on today's presentation. We value hearing from you, and it does inform our work. So please fill that out and add any comments you feel we should hear or know about. And I really want to thank my team here, Hope and Laurie and Marlene, as well as Don Dill, who's been an excellent partner in this, and we're moving forward and hopefully sharing some good resources that you can use and strategies that, we always talk about. It's an underhanded softball. We're hoping we're throwing your way and you can catch easily. Take the presentation with you. Hope, just real quick, if you could unmute and give any guidance. I know we posted, I think, in the chat where folks can download the slides from today. That's up on the chat still, right, Hope?
I just reposted it.
Excellent. Thank you, Hope. And I think we'll leave this open for just a moment for folks to be able to copy and paste that and take the PowerPoint with you when you're talking with your tax preparers or your certified work incentive coordinators, or definitely lots of good links. So thank you so much, everyone. Hope you have a good rest of your day and have what you need moving into tax time and making the most of your ABLE account from last year and this year as well. Thanks, everyone. Have a good day. Bye.